Gold touched a two-week high as the US dollar retreated amid risk-on sentiment thanks to increasing expectations of a US-China trade deal. Meanwhile, palladium is on a tear, hitting all-time highs, having risen by more than 75% since last August. Joining me now is Ronnie Stoferle from Incrementum Research and Investment Funds. Ronnie, thanks so much for coming in.
Thanks.
So let's start with gold. I know our audience are very, very keen on the precious metal. Tell us about your outlook and what's your price target for year end?
Well, we are pretty optimistic on gold. From our point of view, we're in the next stage of this bull market. You know, the Dow theory has 3 stages. The first is the accumulation phase, where only contrarian investors buy into it. I think we've seen that 2015 to 16, and now we're entering the second stage, which is the public participation phase. The third stage is the mania phase, but we are far away from that. From my point of view, once we go over this 1360, 1380 resistance, then basically we can go up to 1500 by the end of the year. And what really makes me confident is the fact that there are so many institutional players on the sideline. They want to enter gold, but they haven't yet. So I think institutional demand, investment demand will really be the main trigger for gold going forward.
So you mentioned the technicals there. From a fundamental perspective, what do you think is driving the demand for gold right now?
Well, I think that gold is a very, very good portfolio diversifier. We have seen it in the fourth quarter of 2018. Basically, every asset class was down. Gold in US dollar terms, it was down 2.5%, but in every other major currency, it was up. In the euro, for example, it was up 3.5%. So I think that in the fourth quarter, gold perfectly showed that it stabilizes your portfolio. And I think going forward, the main case that we're making for gold is this monetary U-turn that we are currently experiencing. So the Federal Reserve already kind of changed their path. We won't see 3 or 4 rate hikes in 2019 like they announced a couple of months ago. From my point of view, we will see lower rates, we will see an end of quantitative tightening, and we will see quantitative easing in the United States, because I think the United States economy is much weaker than the headline numbers suggest. We have seen it with retail numbers quite recently. So from my point of view, we can make the case for a recession in the US happening 2019 or 2020.
So you're expecting quantitative easing from the US in the coming years?
Absolutely. I mean, I think from my point of view, there's no question that the Federal Reserve will implement QE again.
When are you thinking?
Because, you know, from having a look at the balance sheet of the Federal Reserve as a percentage of the total GDP, there's much more room for the Federal Reserve, especially if you compare it to the Bank of Japan. They already had 11 rounds of quantitative easing. And also compared to the ECB, there's lots of room for new QE. I think they will first, of course, lower rates. They will pause QT, and sooner or later they will have to announce a new quantitative easing program. And this is really going to be the point in time when gold picks up momentum.
Wow. So let's talk about the demand side of the picture as well, because according to the World Gold Council, China was the world's largest investment market for gold bars and gold coins last year. So obviously there are concerns about a deceleration in China, as well as those ongoing trade tensions. Could that dampen demand for gold and in turn prices?
Well, physical demand from China is fairly stable. It was a bit more than 300 tons last year. I was in China in December. I will visit China 2 or 3 times this year, as we will publish our gold report in Chinese from now on as well. So I talk to Chinese investors quite a lot, and it seems that, of course, there's lots of problems going forward for the Chinese economy, but the Chinese government and the People's Bank of China, they already did this monetary U-turn. So they lowered reserve requirements, they lowered income taxes. So there is monetary and fiscal stimulus in China. So going forward, I think this should make a pretty positive environment for commodities. Everybody is bearish on commodities at the moment. And I think when it comes to the total gold demand, it is fairly stable, with jewelry demand from China and India being the most important drivers. It's fairly stable, but as I've said at the beginning, what's really gonna change the gold market is investors' demand. Last year it was only ETF inflows, was roughly like $4 billion US. It's tiny. And once the general market participants, institutional players go into gold again, I think this will be really the big driver for gold.
So it seems as though a lot of your thesis is about the relationship between a potential recession and demand for safe haven assets like gold. But in the last kind of year or so, bar the fourth quarter of 2018, the relationship between risk and gold has broken down a bit. We haven't seen that tight correlation that we might have done traditionally. So does that potentially weigh on your theory?
Well, I think, up until third quarter, everything was fine, at least on the surface, and people were expecting too much from gold. Stocks were doing fairly well. Their, volatility wasn't a really big issue. Real estate markets were doing well. Emerging markets were doing okay, although the dollar has been really strong. All other markets like, art markets, whatever, really did pretty well. So there wasn't any real need for people jumping into this safe haven again. Once recession fears come into the market, I think this will be the driver, and we crunch the numbers. And actually, recessions are a great environment for gold. They're a horrible environment for most other asset classes. Why? Because gold discounts that there will be monetary stimulus and that there will fiscal stimulus. And I think this monetary U-turn that we're now slowly seeing is the beginning of this monetary stimulus.
So are you expecting a US recession or a global recession?
Well, we're actually seeing a globalized slowdown at the moment. In 95% of all economies all over the globe, the current numbers are weaker than 1 year ago. So we're seeing in emerging markets, especially in the Eurozone, with Germany being on the brink of a recession, Italy being in a recession, France being very close to a recession. Of course, China is not doing so well. Australia is a problem. So we're seeing all over the globe that actually economic numbers coming in are really, really weak. And from my point of view, a recession is something absolutely normal, and it's actually something healthy for an economy because it's a reallocation of resources. But the longer you fight this recession, the more pent-up demand for this reallocation is created. So from my point of view, if you really want to fight this recession, you can take up the fight, but the consequences will be really bad. I've got no doubt that central banks will take measures. Again, they will take drastic measures. The Federal Reserve has got some leeway for lowering rates. On average, within the course of a recession, interest rates are lowered by 500 basis points. So that would still take the US into deeply negative territory. I just wonder what the ECB is going to do because they're still at zero. So this is the big question for me. And this environment, those recessionary clouds that are coming up and the anticipated actions, drastic actions by central bankers, this is basically the main case that I'm making for gold at the moment.
So is the key risk then to your gold bull case if the US economy and the global economy actually holds up better than expected?
We could say so, but that's positive, of course, I don't advocate. I don't advocate having 100% in gold or mining stocks.
Purely within the gold investment case.
Of course, that would be some sort of a headwind. But actually, we've seen in the last couple of years the economy going fairly well. Equity markets going pretty well, and we have seen that those correlations, of course, can change. Let's not forget from 2001 up until 2008, the economy was doing pretty well, but gold was doing pretty well as too. So from my point of view, the fact that the world is de-dollarizing, diversifying out of the dollar, we have seen that last year we have seen the biggest central bank buying since 40 years actually. So it's not only China, it's Russia, it's Kazakhstan, it's Turkey. They all want to diversify out of the US dollar. I think that's the second really big story that one has to follow when you're interested in gold.
So in terms of opportunities within precious metals, where do you stand on gold versus silver?
Well, of course, if my assumption is right, that we're in a bull market and now this public participation phase, according to the Dow theory, is beginning, where the media picks up on gold again, where Wall Street banks increase their price targets, where everybody is getting a bit excited about gold again, because the last few years have been pretty negative, obviously. Then I think silver should outperform gold. Silver is a tiny market. Investors' demand for silver is basically non-existent. Although I think from the demand side, especially from the technical side, I think you can make a very strong case for silver. But what's really going to change the picture and the supply-demand dynamics for silver is investors' demand. So if you want to have some leverage on rising gold prices, of course, buy silver or buy mining stocks. And
are there any levels on silver that we should be paying attention to? And what's your sort of target for the year end?
Well, for silver, we follow the gold-silver ratio quite closely. So how many ounces of silver can you buy with 1 ounce of gold? And we have seen that this 80 to 82 level is very, very important. We bounced off and now I'm expecting a lower gold-silver ratio. So my very long-term target for gold is $2,300. Actually, gold is on all-time highs in many currencies at the moment, but in the US dollar. So I think when we hit $2,300 in the next couple of years, silver can easily go to new highs at 50 or even higher.
Ronnie, thanks so much for your time. That was Ronnie Stoferle from Incrementum Research and Investment Funds. I'm Victoria Scholar, and remember to find me on Twitter. I'm @VictoriaS_IG. Thanks for watching IGTV, and we'll see you very soon.